And again, to trade candle 3, you guys know we're going to wait for an opposing run and then a change day delivery with SMT. So the last thing I'll talk about is candle 3. How do I trade that? That is strictly a continuation candle. Now, I learned this, how to trade candle 3 from T-Trades. T-Trades taught me how to trade candle 3 because I traded candle 2 exclusively before, and now I know how to trade candle 2 and candle 3. And his model is candle 3. So what I'll do is I'll briefly explain it, but he is the one who's kind of mastered trading that third candle. So obviously, go look at his most recent YouTube video. Go look at his video on that explains the indicator. That is like the template for trading the next candle or the next day model after our reversal candle. I've made my payouts and my model around candle 2. T-Trades has exclusively looked at that candle 3 and getting involved in that. But I'll teach you quickly, right, because we trade very similar, how that candle 3 works. So say, for example, we get our change in state of delivery in candle 2. So say this right here is candle 2, gives us a change in state of delivery. And this is the open of candle 3. All right, what I will do is wait right here. This is candle 2, right in here. So you can say all of this in here. I don't know why it won't drag. It's weird. Strange. One sec. I'll just draw another schematic over for you guys there. So this is all candle 2, right? Which takes the low of the previous candle. That's our liquidity sweep, right? Remember, we talk about it right here. So that's the purge of candle 1's low. What else do I need to see in here, guys? Now I've taught you the model. What are we looking for in here? Tell me the things that we're looking for. SMT. What do we need to be in here? What do we need to be? What am I missing? Right here. What should this be? Everyone put it in the chat. Come on, this is the foundation for the model. What do we need to be in? Key level, key level. Good words. Yes, Pierre. Key level. Good job, Andressa. Key level. Yes. Do you trade this model, question, without a key level? Do you ever trade a wick of candle 1's low that just looks like this without a key level? Yes or no? No. That's pattern trading a wick of a previous candle low. I don't do that. You need to be trading into a higher time frame imbalance or a swing point. Okay? So it's not just one candle low being swept. And T does a really good job of explaining how you use time frame analysis to find those higher time frame levels. There needs to be a key level and a defined draw on liquidity. If not, you're just pattern trading it, okay? And it won't work because you're not going to have an expansion, right, formula in the market if there's no higher time frame manipulation. Remember, the market needs to draw into that key level for us to offer a lower time frame reversal, or else there's not enough juice, right? There's not enough gas in the tank to even allow for expansion. There needs to be order pairing of a higher level. And if that sounds confusing, go watch my video on order pairing, and that will make more sense. We need a higher time frame key level. This is C3's open. So how are we going to trade C3? We're going to wait for an opposing run to form. Plus SMT. How do I say, for my students who have been learning from me for a long time, what is the only way a swing point forms in the market? What is the only way a swing point forms? SMT. SMT is the only way a swing point will form. So when we get the new candle opening, we wait for the opposing run, which is defined as our manipulation or our order block, right? Then we wait for a change in state of delivery. Oh, look how similar this is to candle 2, guys. The opposing run, the change in state of delivery right here. Okay, so right here, that's your opposing run. And we need to see for that to be considered a swing low, just like down here, an SMT. Giving away all the sauce, guys. Not gatekeeping anything from you guys. There it is. Enter in candle 3 once we get a intra candle 3 changes day of delivery. The same criteria that qualifies a swing point being created on the hourly will qualify a swing point being created on the continuation candle. What do I not need on the next candle? By definition, because it's a continuation, not a reversal. Remember the lot, guys, you see, I'm getting excited and teaching you because if you've watched my content, you know there's a logic to this. What does every single reversal need? Again, the reason why I spend a lot of time teaching you guys theory is because you should really see that the way in which we perceive the market is not based on a pattern. What does a reversal need? And we're using words specifically. We're not just saying things. What does a reversal always need? What does a continuation need? So that's a reversal. I'm really giving away everything. This is everything I've spent 3 years learning in the market, guys, all in one video. There we go. Okay, you guys can never complain about me not putting out my entire model ever again. I did not think I'd be going through everything like this, but I'm very glad we're doing it. There you go. You guys see the logic there? When we are reversing, we need a higher time frame PD array. That's why we have the key level, and C2 must trade into that key level. When we are continuing, we do not require the higher time frame PD array. We just need the swing point to be created. How are swing points created? What two functions? SMT, change in state of delivery. A reversal swing point, remember, a reversal swing point. So what this is saying is like reversal swing point requires 3 things. Needs a continuation swing point, needs so go watch my market maker model top-down video, and you'll see exactly how these pertain to what. Again, me talking about these levels or what state. Do you guys also recognize how this is just a blending of market maker models? What would this be called, guys? Down here in a market maker model. Someone tell me. Someone who's really, really like studied my stuff. What is this called down here? SMR? Yes. Okay. Then what is this called? Low risk entry or first stage of distribution, right? Sometimes inside of the SMR, remember when we get that change in state of delivery, we'll get that low risk buy as well, right? Sometimes in candle 2, we'll get offered the entry. Other times we'll wait for candle 3. This is how we know. So another way I could say this is we trade candle 2 when it offers what? The low risk entry. Ah, you see? There you go. We trade C2 when it offers a LRE, low risk entry. When it doesn't, that low risk entry will be offered when? Candle 3. That is how you can define an area of the market maker model you're participating in, right? So then people ask, then why do I limit order as we change delivery, or why do I market order as we change delivery state? Because sometimes, as you'll see, price does this, right? Once it shifts delivery state here, it doesn't offer the low risk entry till where? Much higher in the range. That's why you'll often see me limit entering inside of that change state delivery, or market entering. As soon as we change delivery state, you'll see me enter on candle 2 because I'm thinking candle 2 is going to do what? Expand. So then candle 3 might consolidate, manipulate, and then further expand. How many times have you guys seen candle 3 consolidate? Right? Go on your charts. Don't believe me, just look. I will prove it to you. Look, this candle, let's look right here. This candle is a candle 2. What does candle 3 do? Does this candle expand? Or does it consolidate? It consolidates. What candle do you want to be involved in? You can't trade just candle 3 here, which is why I'm teaching you a model to catch a candle 2 reversal. Do you see the power? This is where me and T-Trades have slightly different trading styles because he doesn't involve himself in candle 2, and I will almost exclusively try and look for these candle 2 expansions because I want to get involved before candle 3 does this and just chops because, again, market cycles. Does market ever go from consolidation to manipulation to expansion to expansion? Does market ever go from expansion to expansion? Ever? Is that allowed? Can we go from expansion to expansion? No, we go from expansion to consolidation, expansion to retracement, expansion to reversal. It's not efficient. That's the best way to say it. Market needs to pick up more slack in its string. Remember, we're using the string to displace. We need to build more looseness of the string and then displace again. Build the right here, the string is stretched, so it needs to recoil itself. In doing this, it's like a coil. All of this expanded coil is now being dragged up, and then we're just getting smooth again. Maybe we'll get a retracement, then we'll get another expansion, okay? Market does not ever move like this, and market does not ever move like this. It moves like this, right? It moves in functions of consolidation, expansion, consolidation, expansion, consolidation, expansion. So when we are looking at a candle 2 to expand, candle 3 looks like shit sometimes. Have you guys seen that this week? Like, who here traded a candle 3 that just chopped all candle 3 this week? Like hands up, right? Like put your, I know I did because I didn't recognize that all of the juice was used in candle 2, right? So that's why my model is especially primed for catching those second candle expansions. Okay, so go back here, right? A continuation needs an SMT plus SSD. That's where we're going to get involved in candle 3. I'm giving you guys everything I use to trade here. Okay, anyone have questions about the model? This is it. This is the sauce. If you guys want it all on one page, let me put up these 2 images. So this is another image that you might have seen me put in before. Again, this is mapping the candles to a market maker model. You'll see it right here. And then there's this. The reason why I've made all my PDFs so consistent with all of what I'm teaching you is because I'm trading the same things. Here you go. This is it. That's the entire model. This is how we relate our entry function to our market maker model. And here's how we relate market maker models to swing points, like that. We relate market maker models that look like this to these swing points that you see right here. That's how we relate them. That's what this looks like. Then we use a chain of state delivery entry function along with these confluences to get involved. And then the logic and the execution is mapped, and that's it. And then we can make money in the market with a consistent model, right? Okay, so let's do some examples, right? Again, this will all be recorded. You'll be able to see all this. Let's do some examples. We only need to do a few. Let's do someone give me a higher time frame. Just throw it in the chart. What do you guys want to do? How do I incorporate protraction profiles? You'll have to go watch those videos. I use that for my daily bias. So again, all of this model relies on one assumption. You have a good idea of the daily bias. Are we going higher or are we going lower? Trade this model in that direction, not opposed to it. How do I build daily bias? That's my next big lecture I'm going to do. I use protraction profiles. I use IRL, ERL, higher time frame, and I use candle closures on higher time frame charts. That's my 3 concepts. But today we're not doing a daily bias video. Today we're doing a model entry video. You guys already know how I build daily bias, especially my students and people who are in my Discord. You see me build a daily bias every day using these things, right? Or else the model has no weight. The model's useless unless we know which direction we want to trade it in, right? I use weekly profiling and daily profiling for my daily bias. Yep. Why MXM is focusing on C4? Because again, once you have a reversal printed in the market, the next day model is once the swing point forms. And if the draw has not been met, this is going to be what stage of a market maker model? You're asking a really good question. Again, I want you to remember this is the draw. This is a really good question, and it's a perfect time question because what stage of a market maker model is that? Again, the reason why MXM Trader taught me pretty much, most of my foundations, because all the information I'm teaching you guys comes from learning from him at first, right? And now I'm just putting it together with some other stuff of my own observations. Look, what stage of a market maker model is candle 4? Again, conceptualize what these lower time frame candles look like. Oh. So candle 4 is the what? Silver bullet. Yes. Silver bullet is the lowest liquidity or lowest resistance liquidity run. LRLR condition is existing here, right? It's that last 25% of a swing grade, which you guys have seen me do as well. See how everything I trade comes together? Remember swing grading? How many of you guys have seen my swing grading lecture? Talking about the different quartiles of a market maker model as they pertain to different phases of distribution, right? That is swing grading, and the 4th candle is what? The LRLR silver bullet, right? And then the halfway point forms what? The high probability order block or breakaway gap. Which candle do I trade of this swing grade? Which quartile, guys, am I trading? Put it all together. Put it all together. What quartile am I trading? 0.25, known as what in swing grading? The SMR or the low risk entry, right? So now go into my swing grading lecture right here, and you'll see this. Notice how everything I've ever made for you guys is just consistent. It all builds towards this concept or these series of concepts I'm teaching you. Right? That's swing grading right there. I'm putting some pictures in the chat for you. Here's an example. See? You guys see that? This is swing grading right here. This is something that I've learned. Now, I learned this from when ICT talked about it vaguely. No one ever taught me this in terms of a mentor, but I learned this from ICT, right? This is how I use swing grading, and I incorporate it with what? These candle formations. Remember, what is the model called? The Primo model is the creation of swing points. That's the logic. Swing points created in these candles. Smart money reversal down here in candle 2. LRE offered in candle 2. If not, trade candle 3. How do I know candle 2 is going to offer the LRE? The 4 confluences of expansion. Small opposing run, accumulation before, potential double purge, SIST early in the candle. Are you putting it together, guys? Do you see how everything builds on each other? When you get to candle 4, this is known as the next day model. This is known as the creation of a daily swing. This is known as the SMR. See the names? We're creating the daily swing when? When the 3rd candle forms, right? Because now we have an opposing delivery state candle. We have a local saddle point in the market or a swing point. Creation of the daily swing. Trade what? The next day model. Candle 4 and candle 3 are going to be expanding, but often candle 2 expands. This is the Primo model. This is the T-Trades fractal model. Actually, let me annotate this all for you. This is the Primo model, my model. This is the Fees' model, okay? This is the TTFM. This is next day model. You guys understand how it all builds? All of the ideas we're talking about are consistent. It's just entering during different phases of price distribution, okay? So fees will enter during the smart money reversal. T will enter in the 3rd candle, anticipating the creation of the swing that's confirmed by the change in state of delivery of candle 2. An MXM trader says if the draw is not met, this candle has nowhere else to go but what? Expand, right? This is how you build a swing point narrative, okay? Piece by piece. Very interesting, right? This is a cool one to keep in your notes. So when you see different language and you hear different language, right, about trading, you're like, there's so many models. Are we not all trading something similar? What you need to understand is the logic, okay? It's the logic that will differentiate you and allow you to actually take winning trades. Because if you pattern trade any model, it's going to fail you because you're missing the most important thing on the chart, which is the draw. You're understanding why this swing point should form here, right? And whether you want to trade the reversal candle, right, the FE's Primo model, whether you want to trade the fractal model, or whether you want to be a purist and trade the next day model, it does not matter to me. I'm going to be teaching you the logic for how to view price in these swings, because that's how all price moves in the market are grounded. Done. Okay. All right. Anyone have any questions about that before I move on? I know I get DMs every day saying, what's the difference between you and the 3rd candle or the TTFM? Or why does MXM Trader focus on this candle? Do you see how they're all different parts of a distribution? This in here is the low risk entry area where I like to trade. Here is the high probability order block that's being formed in the higher time frame. And then here is the silver bullet, right? This in here is your silver bullet. This is your And this is your sweet spot LRE SMR. They're all just three sides of the same coin, if that it makes any sense, right? They're all the same logic, just different phases of distribution. What does pattern trading mean? I mean trading this candle here on a sweep of the first candle low like this without any higher time frame key level SMT and reason to go higher. So if there's no draw up here, if the draw doesn't exist up here, like I have right here, if this doesn't exist up here, if say if it's down here, then this is just gonna do this, Paul. And how many times? I mean, look, go into a day like this, and you'll see that if you're trading against the draw, right? If you're trading against the draw, any like higher, like say for example, this will only give you a very shallow run, and then you'll go higher. Same with this. You don't want to be trading this move. You'd rather be trading that move. So again, you'll be able to see this when it fails. When it fails, you're trading against the direction of your draw. That's what I'll say to that. And we'll do some examples. Okay, let's do a few examples and then we'll call it. I mean, this has been extremely comprehensive so far, so it will take some studying. And I'll post this after, by the way. I'll post this on the lessons. I'll put a recap, and then I'll also post it on Twitter for those who weren't able to make it today or be in the server. Again, I offered a free trial for the Discord, guys. So if you just wanted to come in for the lecture, feel free to leave after. It's all good. Check out some of the lectures in here. Feel free to stay and trade for a week. It's completely up to you. I just wanted a place to host it, right? Okay, let's look at some examples. Let's start with a very high time frame example. Right? This would be how a swing trader would use the Primo model. We're going to call, which is essentially Phi's second candle model. Okay. We're going to start off with the time frame alignments. Monthly key level, daily reversal signature, D2 formation. That's the time frame alignments, okay? Let's do it. I'm going to pull up two charts now so we can see all of our SMTs. I'm going to get rid of everything. So this is, if you want to be a swing trader, you're going to start from now on, this is how you're going to swing trade using my model. Again, my model can be applied to all time frames, which is the best part of my model, is that you can use it as a swing trader, a day trader, or a scalper. It doesn't really matter. Okay, let's do the monthly key level, guys. I'm going to choose this monthly external range low. So this is my key level. It's a swing low. It's not a fair value gap. It's a swing point. All right. Price comes in, creates a high, and then it runs that low. It's actually this low right down here that we form SMT with the YM. So this is a swing point on the monthly chart. I'm going to mark that out on all three indices. Swing point on the monthly, swing point on the monthly. I'm going to need one more chart just to show you the SMT, guys. It goes with YM, and I only consider YM for higher time frame divergences. If you know, you know. I don't use YM on the lower time frame, but I will use it on something like a monthly chart. Okay. First step, defining the key level. So, key level, monthly ERL. Key level and key level. Okay. First things first, guys. Once we have a monthly key level, what time frame do we go down to? Someone tell me in the chat. From a monthly key level. Daily. We're now going to be framing a C2 reversal candle on the daily from the monthly key level. Remember, we start our analysis on the higher time frame, and this is the swing trading alignment. Daily time frame is the lower time frame. I'm going to get rid of YM now, guys. I don't need it. I already have my divergence. So monthly ERL, right? And I'm going to put in my divergence that's formed. SMT, the correlated asset. and SMT with a correlated asset. Okay, cool. It's actually this low all the way down here. Now I want to see a C2 formation. On what time frame do I want to see a C2 formation, guys? Based on this. Is it the monthly or the daily? What am I trading? What am I trading? What chart? Am I trading the daily chart or am I trading the monthly chart? You guys tell me. Monthly, yes. So remember, I am framing a C2. This is the previous month low that we're wicking. That's the previous month low. I'm anticipating this monthly candle to form a C2. So I want to look at my criteria for expansion. What are those criteria? So the first thing I'm going to do on this time frame now is mark out the open of that monthly candle, obviously. This is the monthly open. Remember, we're going to use our criteria, right? So this is the previous month low. I don't need to keep that on my chart, but I can if you want. This is the potential C2 forming, right? You guys can see the logic building now. Logic. The monthly open is right here. That's why you'll often see me use an indicator like this. And the reason I'll use an indicator like this is so I don't have to manually plot the monthly open, but you can see for now, I'll have it right here. Okay. Cool. Here's a monthly open. Did we deviate away from it by what day? So let's do all three criteria. Okay. First one, do we have a double purge? No. Right? This is the previous month high. Again, this is more complex, guys, because I'm giving you way more than a lot of other educators on just pattern trading this. I'm making you look into candle 2 and think of some things logically, as opposed to just saying key level SMT SIST. You could go. There's lots of really great educators who are going to teach you great models for just that logic. I'm going to teach you to look at candle 2 more. Consider it more than you have before. Okay? So, do we double purge the previous month high? Yes or no? Everyone should be able to see. Do we take out candles 1's high first? No. Okay, no double purge. That's one of my confluences. Someone name another confluence of mine. The deviation from the open. How large is our wick, right? Our wick to the low is 2.5% on NASDAQ, 2.5% on ES. So about 100 points on ES and 600 on NASDAQ. It's a pretty meaningful deviation below the low, but is that outside the realm of possibility for an expansion? Again, use the logic for how much you see daily candles expand or monthly candles expand. Now, Afiz, I want to be more mechanical. I want more data. Well, you could use the average monthly candle distribution. Now you're getting technical and you're using data to support that statement. I'm just telling you to look at it, but here, let's maybe take an expanding month and look at the average, okay? Let's consider this to be an average expansion month in the market. It looks pretty similar to other average expansion months. So let's just use this one. 1,600 points. And on ES, an average expanding month, 300 points. So we have less than a fifth of that as manipulation below the monthly open. Is that considered a small wick? You guys say yes or no in the chat. Small, does this meet the criteria? Let's put up some monthly candles here. This is actually a really good lecture, guys. I'll record this and upload it because I think there's a lot that you can learn. Okay, cool. Let's get rid of these. I just want the candles. Cool. All right, so do we have a large or small wick here, guys? Relatively. Right? compared to the average monthly expansion, which we said on NASDAQ was 1,600 points. Remember, look at the average monthly expansion candle. We'll just use one of them. We'll say a candle like this, which looks like an average expansion. Again, you can be more empirical with your data and go in and actually run these numbers, but I'm just going to use this candle. Okay, it's 300 points on ES, and on NASDAQ, that same candle is 1,600 points. Okay, so this manipulation below the daily open is, I'm just going to get rid of this. It's annoying me. This manipulation below the monthly open is 500. So 1,600 is the average, and this is 500, right? So 1,600 divided by 500, or 500 divided by 1,600 is what? It's about 30% of the average, right, expansion of the month. So I think that it can still move higher, right? It's not like it's using all of its coil. Let's say all of its coil is 1,600. Is that a relatively small wick? That's one confluence. It's close enough, right? So trader cost, do you think that there's still room in this candle for expansion? You tell me. Yes or no? Without seeing it, just based on the fact that there's 1,600 points usually in a candle. How many points to the upside could we get then? 500? 500, that's 1,000. So there's maybe 600 more points of expansion, right? So let's say maybe there's 600 points of expansion higher, right? If it used all of the coil. Again, that you can be more empirical with this, and there is data tools that you can use, like StatMap, right? The StatMap shows you average manipulation levels, for example, but I don't need that for this model because I'm just going to say, what's another confluence? The time at which it takes and if it displaces back above the range. So what can I see? We open the month, we trade higher, taking out some form of buy-side liquidity first, inducing longs, then we trade lower. Now I get my signature forming. So this is where it becomes more signature-based, right? Inversion fair value gap, SMT. Look at this change in the state of delivery right here. ES prints an up-close candle. This is a bullish candle. You have to look really closely to see it. Right? ES prints an up-close candle. NASDAQ has a down-close candle here. That told me a lot about why ES was stronger, because ES shifted delivery state and inversed the fair value gap with more displacement. But that's a conversation for another lecture on relative strength. But if you guys know, you know, because I've been trading ES all month for that reason. Okay, we're in a bullish program now, right? Bullish program. So now we're in a daily buy model. Where would my entry be? Well, SMT, IFVG, change in state of delivery. I market enter on the change in state of delivery. Or, if you guys know my entry model, the IFVG. So that's candle 2 forming its entry. So for me, when we retest the inversion fair value gap, or when we change delivery state, either one, I will enter. So on NASDAQ, if I was daily trading, limit goes with the IFVG, risking the low, targeting 2R. So if NASDAQ hits here, 2R has been delivered. Okay? Now, if you're really smart, what are you going to risk here? You're going to risk this low? Where else could you potentially risk, guys? Where else do you see me risk every day on stream? Anyone who's in my community, where do I put my stop loss usually to get a better R on candle 2? Rejection block. Yep. Rejection block low. There you go. For me, on the higher time frame, if we come in past the halfway point of these wicks even, this rejection block is the lowest down close candle into the key level. If we come past that wick, we're probably going to take the low in my mind. So I have no problem trailing it to either the halfway point of that largest down close candle's wick, or even just this swing low. And now my risk to reward is significantly better, right? Now I get 2R here. So I miss my 2R objective by 2 points, essentially. So essentially, as soon as ES gives it to me, I would take it on NASDAQ. So you've already done and taken a winning swing trade using my model. So using my model this month, you're plus 1.9R. Fantastic. You're very happy with that 1.9R. And why would you take it at 1.9R? Because look what happens at the highs. ES hits that 2R objective and forms SMT. So the minute ES takes out that high on this day, you're closing. Does that everyone understand why? You would be closing on NASDAQ when you hit the external range high. All my students understand that, right? We TP at SMTs because SMTs get us into the market. SMTs take us out of the market, obviously, right? You see me do that every day on stream. So that should be clear to you. So for you, you take a winning trade on NASDAQ there. On ES, which is stronger, you'd be entering on what? For me, in candle 2, I'm entering on the change in state of delivery because it might not retest it. Remember, candle 3 doesn't open until here. That's candle 3. So we're currently still in this candle. Can you guys in your head almost visualize these candles now after this lecture? The biggest accomplishment for me is if you can visualize these higher time frame candles in your own head now. Because that was the changing point for me in my trading, was being able to see these candles on the higher time frame in my head based on what I'm showing you on the lower time frame, right? So we're in this candle too. So I'm entering as soon as I see that change in state. I'm risking again here. I'm targeting the external highs, right? Or 2R. Now here you can see my risk is much higher with this entry, but the market's also more bullish on ES in candle 2. So again, I have to define my risk. What do you guys think this is going to be? Do you think that once price trades above this candle here, again, use logic, not patterns, trades above that in versus this fair value gap here, do you think that price should come back into this fair value gap down here? Yes or no? Absolutely not, because if it did, the market would not be doing what in candle 2? Think about the higher time frame candle in your head. Think about the higher time frame candle. What would it not be doing then if it came all the way back down to that low? It wouldn't be expanding. It would be doing what? What's the word that it would be doing? It wouldn't be expanding. It would be consolidating. Reversing is a lower, in this case, it's going to be lower time frame up and down. So that's consolidation, right? Right, Dom? Think about it. It's going to go up and then down. So then it's not an expansion C2. So if price came back to that level, I don't want to be in the trade anyways. Okay? That's how you define your risk to reward, make it better. So when I enter here, that's a breakaway gap. So for me, that low needs to be covered, but realistically, the minute we trade and create, so this would be 2R now to that high, the minute we create an opposing candle, there you go. That truly should be your stop loss, which is why I'm not saying this, guys. Go look at my charts. For my now, I'm not, this is not hindsight. Look at my market analysis channel when I called the breakaway gap forming. Where's my daily analysis? You guys will have to look at my market analysis channel. I called it the daily breakaway gap like a month ago, or at the beginning when that first move happened. We said this should stay a breakaway gap the minute we formed that opposing down close candle on the 16th. Because once we close above it, then we're not coming into there. That's how you dynamically change your risk to reward inside this candle, because you do not need to say that's your low. Do you guys, if it came all the way back down, guys, you don't want this trade. Trust me, you don't want it in here anymore, right? If it came all the way down to here, you just say, I just don't trust this candle to not just do this on the higher time frame and look like this. Because if it came back there, the candle closes like this. Remember, visualize the higher time frame candle. Is that a C2 expansion or a C2 consolidation? It's a C2 consolidation candle. So you don't want to be in that trade anyways. You'd rather wait for what? The next candle to open, right? Cool stuff, right? Okay, so that's your example on the daily chart. So simple, right? You can see the model prints on all time frames. Now let's take it this and say, okay, if he's like, I'm not a swing trader, I'm not going to be using a monthly level. Okay, fair game. Let's use this same example on a different time frame. We're going to go through all the time frames. It's going to be cool. So you're going to see how it works. So let's use a weekly key level. Again, we had this weekly swing point in here. That was our SMT. Remember, IRL is a key level. So now what's the lower time frame? Someone tell me. 4 hour. Well done. On this 4 hour chart, we're going to look for the same exact signature of price. I have my daily dividers here, but we can hide those for now. We don't need it for this analysis. I just like to have that every day when I'm day trading, obviously. Cool. Again, let's use the weekly open for this week. Notice why these levels like weekly and monthly opens are important. Now, I usually don't like swing trade, so I don't have the monthly open, but for this month, it's actually important. I do usually have my weekly and daily opens. So on here, I'll have weekly and daily opens. You guys will see this on my day trading charts because I'm using the same logic, guys. I just don't go over it every day on my stream with you, right? So now look, let's rewind. Yeah, let's look at the weekly reversal candle because there's been multiple weeks. So then look, what candle are we framing in here? What type of C2 is this? Again, just say it to reinforce it in your mind. What type of candle are you framing on C2 here? Reversal expansion, right? Perfect. So you're going down to the 4 hour and you're looking for the signs of a reversal expansion. Again, manipulation away from the weekly open. You guys said, well, what about weekly profiling? What day? Again, remember this. Okay, we're bringing it all together. Time, right, in the candle is just as important as price. Time in the candle of manipulation and SysD is just as important as price. What is weekly profiling telling you here? When do we form the low? Monday, 2 a.m. Then we get a change in state of delivery, which is a closure above the consecutive series of opposing candles into the key level on Wednesday. And you're like, okay, so Monday made the low, right? Here. Wednesday expanded through, and the rest of the week just chopped. However, you can see that before the change in state of delivery forms on Wednesday, we get an early indication of change in state of delivery. Inversion fair value gap. Not one, but two. Look at price holding these levels. Right? Look at the sensitivity. This is giving you an early indication that the market is primed to expand because Monday made the low of the week, and then we expand off of that weekly candle's low placed on Monday. We get a change in state of delivery and two inversion fair value gaps. Why do you think I longed CPI, guys? Remember last week I longed CPI before CPI? Because I saw the way we were reacting to this 4 hour key level. That was my analysis, right? So here we go. Now we have the inversion fair value gap. You have the confirmed change in state of delivery right here. But of course, for me, right, the inversions were really what gave it away for me, specifically how price respected these. In addition to what? What do you guys see in this leg here? Everyone should be able to see it. What is in this leg? Multiple of them. Displacement, fair value gaps. The market is displacing back above the weekly open. So the weekly candles opened low, formed the low of the week, and is now displacing higher. These inefficiencies before the change in state of delivery clue you in to what type of candle do you think you might get? A reversal expansion candle, because we're displacing with lots of time left in the candle higher. Okay? And price made its low early in the candle as well. Again, two core confluences we're using together, right? So your entry would be in this inversion fair value gap, or you could even use the fair value gap if you're just trading the weekly 4 hour. This is known as the weekly range traders. This is a weekly range trader time frame alignment. So you're trading that 4-hour fair value gap or inversion fair value gap, this H4 BISI or this H4I FEG. Notice how they're stacked. What's that called? Fair value gap, inverse fair value gap. What do you guys call that? A balanced price range. Yep. You take that BPR, you long the open because you don't know how low these wicks will go. What is the protected stop loss? Remember what I said, right? We're going to be using either the wick low or you can use below the 50% of this rejection block would be a good stop. So I use the swing point below it and I target 2R. Done. So the model gave you a 2R trade. And on the ES, it looks like this, right? Long either the first fair value gap or the inversion, depending on your risk to reward. Some people will demand a price trade into that inversion. I won't, right? If it's sysd here, I probably, honestly, if it's sysd here, guys, would have market longed that, risked this, and still targeted the other side of the range. I'd still be in this trade, right? Until we formed this manipulation, then I'd move my stop up to there, and then I'd take my 2R earlier as well, right? So I would use a dynamic stop, but the proper entry would be maybe this 4-hour fair value gap, risk that low, target 2R. There you go. So ES and NASDAQ both give you a 2R trade. That's the weekly 4-hour. You're also going to notice what forms in here for the lower time frame. You guys are already seeing it, eh? I mean, we're going to do it as an example, but do you already see what's happening in here? What do you think this key level is forming? For what time frame alignment? So you guys see it in there, right? 4-hour. What do you think I'm going to look for in lower time frame? 15-minute, right? Yeah, you guys see this week provided you examples on every single time frame, which is why I chose to do the lesson this week, because I'm seeing all of the clear examples. Yeah, if you guys are looking for C3, so again, let's mark out C3 open. Yeah, there you go. Friday. So let's mark out the next week. You can see candle 3 actually reached the draw, right? It actually reached much higher than the draw. But this is candle 2. Now look at candle 3's open. So say you miss it. How do you think I had a bias for this week? I'm doing exactly what I did here, okay? Okay, there's our weekly open. I have it marked out, right? I use this line, but you can also see we have the weekly open. Look, small deviation below the open, right? What's the higher time frame array? Do we need a higher time frame array for this continuation? Yes or no? Do I need to have a weekly key level for that continuation, guys? No, right? No, you don't. You need a SMT sysd, right? Oh, there you go. Candle 3 does not require, let's pull this to the actual weekly open. We don't require a higher time frame key level. The nice thing is we have one anyways. Look, where is it? Monday. We have this opposing candle here that price trades into the wick of. But you notice there's no daily key level. So if you're waiting for a daily key level, you're like, ah, shit, right? I wanted price to come back below this low and form SMT. It's not going to, is it? Because you're in that weekly continuation. So you have to recognize that. Here is that key level on the 4-hour. Again, just trading the 4-hour chart, guys. We're not looking at the lower time frame alignment yet. Candle 3. Right? Comes in, forms an opposing run. We have to wait for the SMT. No SMT forms in here. So that's not the opposing run. You know what, guys? Don't even look at the fair value gap. Because what did I say for candle 3? We just need to see an opposing run with SMT. It comes into the same time frame inefficiency. But you can see there's no... Is there any SMT here on the 4-hour chart? Yes or no? Is that an SMT or not? No. You notice there doesn't need to be on that time frame, right? For this model, what you need to see is a continuation, which is going to be on the lower time frame, so you wouldn't be trading it. So for here on the 4-hour, what you would wait for is a 4-hour SMT to form, because you're not going to be considering the lower time frame. So what I would wait for is a 4-hour SMT to form, which is not going to be until here. Notice this SMT that forms. Now I can trade it. So in this move, I'm not trading this lower time frame model if I'm just trading the 4-hour chart, am I? I'm waiting for candle 3 to open. SMT, SysD. Here is my SMT. You guys see that SMT in here? Everyone can see that? We can all clearly see that SMT. If I'm just trading the 4-hour chart, remember, we're not going down and looking at whatever happens in here. Don't look at this because that's the next example of the lower time frame. Just looking at the 4-hour, waiting for the SMT to form, waiting for the change of state delivery. The consecutive series of opposing candles is going to be this, right, into that key level. You could even use this one, but I would use these. As soon as price closes up through there, market, stop loss for me. Again, I'm not going to use this low all the way down here. I'm going to use the halfway point of the lowest candle. So in this case, something like the rejection block low, target 2R. Boom, right? NASDAQ doesn't give it to you, but ES does. Right in here, SMT, take it. Where's the SMT low? There you go. Okay. So you can either use the SMT low as your stop loss or the rejection block. For me, I use dynamic risk. So as this candle forms a down close candle and we close above it, now I can just risk the low of that down close candle. I don't want to see that get taken. You see how the risk to reward drastically improves, right? So that would be your next day, the third candle continuation, okay, of the 4-hour market maker buy model. Any questions about that? Pretty clear. Let's do another example. Now that we're on this chart anyways and we all looked at it, let's do a 4-hour 50-minute alignment. We're going to do every single time frame alignment, and we're going to go down just so you can see how clear it is. 4-hour, 4-hour. Right. There you go. What time frame? 15 minutes. Again, here's where we go into our sessions. Now we're really just day trading, aren't we? This is like true day trading. We have this 4-hour PD array. We need to see SMT inside of here. We look in the 15-minute chart for this SMT. Beautiful. Devil's Mark liquidated. There is my stop hunt. I notice that ES forms the SMT there. Fantastic. Okay, what do I wait for? Change to delivery. Change to delivery right here. Right. Now notice, what candle does that change to delivery form on, guys? Is this a candle to reversal? Expansion or just a candle to reversal? All of these candles don't reverse. So we're actually waiting, right? In here, by the time we get that change of state delivery, what are you going to notice about the 4-hour chart? We have a brand new model forming on the 4-hour. Do you see that? Look, by the time you get that 15-minute, sure, you can utilize this, but it's really 1, 2, 3 4-hour candles have passed, and we've actually printed a new 4-hour model that's way more relevant, right? So then you go back to your 4-hour charts, and you're like, okay, so clearly the next candle did not expand, right? Nor did the next 3 candles, really. They just confirmed the bullish order flow eventually. Look at this. Beautiful SMT, right? Key level was already established. Now we have a stop hunt below these lows. So our key level is this external range low, right? In here, these lows down, right? Okay, now we have a new 15-minute model forming. Also, for the purists, I mean, look at the halfway point of the wick, just because, you know, there's just general ICT concepts in here, right? The halfway point of the wick is going to be a part that you want to hold. Look how ES is way stronger. It doesn't even come into the wick, and NASDAQ comes into the wick. That's how you know ES is going to be stronger on the move up, but that's irrelevant. We have a new SMT that forms at a key point of interest inside that wick. Now we have a new 15-minute model that's forming. Chain to stay delivery. Chain to stay delivery. Okay, you're in candle 2, right? This is look at the 4-hour chart. Candle 1. Here, the sweep and expand, the sweep and expand. So you want to get involved in candle 2 if you see the signature, right? So let's look at candle 2 where it opens on the 4-hour chart. Again, we're doing an example for every single time frame. So for no matter what time frame you trade, guys, you're going to be able to see an example here. Let's mark out the 4-hour open together. 4-hour open is right at 6 a.m. Mark that out on here as well. Cool, let's get rid of this 15-minute SSD. Okay, this is our SSD. Change in state. Cool. All right, model forms, right? Manipulation below the open. How much time is left in this 4-hour candle? Well, look. When we get the SysD, we have a new 4-hour candle actually opens right in here at 10 a.m. Perfect. So you're actually trading. There's a 4-hour candle open, sorry. It's right there. Look how beautiful that is actually for an expansion. So do you notice the low was created with how much time left in the 4-hour candle? All of the time left in the 4-hour candle, right? The low was created at 10 a.m. Okay, perfect. Prime for an expansion, right? Okay. Training day delivery, lots of time left. Look how much we have, so much time left in this 4-hour candle, right? Lots of time for it to expand. Very, very small manipulation or deviation below the open. Very small. SMT right at 10 a.m., right? Perfect. You get that change in state right in here. Long it. Range high is your objective. I'll use that rejection block low and just target 2R if I'm trading that 4-hour candle. There you go. Another 2R trade is taken. Perfect. Both indices give it very, very nicely. Pretty nice stuff here you're actually seeing. Okay, let's do one more example and then we'll call it. So that's the 4-hour model. Now let's look at this day and do the 1-hour model as well, okay? So again, the 1-hour model is going to require us to know that we're bullish on the day. Like I said, the biggest part of this model, if we know all this, why do we still take stop loss? Well, because trading involves risk and we still take losses. Like our model's still going to print losses. But when we're seeing this now, right? We're looking at examples that win. There's also lots of examples that lose. Like for example, I can show you a losing trade I took last week where I went long and just stopped me out first. Like it chopped me out. Like I did an hourly M5 alignment. Let's look at it. No model is ever 100%. You're going to take lots of losses. Don't worry. I'm just showing you some examples here of models that printed wins. Okay, let's look at this day. Which day was that? Tuesday. Let's do an hourly M5 and then we'll call it. Let's do let's do this day. Let's turn our daily indicators on so we can see everything. Again, this is the lowest time frame that I would trade, and this is the time frame that I personally trade because I like the hourly chart the most. So let's do Tuesday. Perfect. Someone's screaming outside. I don't know if you guys can hear that. Yeah. So we wait for the daily candle to open, right? Again, let's mark out our daily candle as well. Oh my God, do you guys hear that outside? Someone is actually screaming. I don't know what is going on. Sounds crazy. Okay, so this day opens up. Oh, this is our short day. Sorry, let's not do this day. My bad, guys. Let's do Wednesday. Here we go. Or let's do this Tuesday. Because we have a short day on Monday here. I remember that. Okay, let's do this day right here. So we're in the New York kill zone. That's when I would take trades. And we're looking for an expansion higher. Again, I'm going to zoom out and show you my daily draw on liquidity. So on this day right here, I'm looking for this daily high, and I'm looking for this daily high, right? Because the end goal, like we talked about from our higher time frame analysis, is going to be this high. So again, we're always trading in that direction. Now I go down to the hourly chart inside the session, which I trade, which is going to be the New York AM session, right? And I'm waiting for the kill zone. So where's my sessions? Let's turn on the hours. Perfect. I have so many indicators I just don't have on even. Okay, we're gonna wait for the New York session. That's session I trade, and we're gonna wait for an hourly key level with SMT. Do I have one? Inside the New York kill zone, right in here. So coming into 5 a.m., I see I have this fair value gap created on the hourly. This is a candle 3 model. Okay, fair value gap. In here, before the kill zone, what kind of candle do I get in here, guys? It's a reversal candle. Yeah, I wouldn't call it an expansion candle, but would you guys call that a reversal candle? Yeah. Well, look, we'll qualify that as a reversal candle because we're actually going to be trading the next candles. We're trading these next candles. In fact, you can see the reversal is confirmed in here on the 5-minute chart. So let's go here. Let's find that 5-minute model that forms. Mark out. Is there SMT in here? It's the question I have. I actually don't see SMT in here. I wouldn't call this the reversal actually, because I don't see SMT on the 5-minute chart there. But what I would do is I'd wait for a new hourly PD range. There's actually one that I missed. I can see it right here on the lower time frame. This is the one I missed on Tuesday, which is why I took a loss, guys. But it's this small volume imbalance on ES on the hourly. Because I don't use opposing candles here, but I could use that order block, but there's a small volume imbalance there. Okay, so do you guys see that volume imbalance? Now we're going to the 5-minute, and we're trying to confirm this as a reversal expansion candle. That was the one I missed. Paul, this is a losing trade I took because I didn't see the volume imbalance. So I actually took a long earlier, expecting a continuation, and I didn't see that key level. I missed it. In here is where I get my reversal signature. So we have these lows, which ES makes higher highs to higher lows to, and we have a series of lower lows in here. There's our SMT. Our chain to stay delivery is going to be defined with this single candle closure here, because this is the consecutive candle into the key level. So on the NASDAQ, it's going to be that same candle here. And this was the long I took as a loss, Paul. So we had this SMT form before, if you guys can see, right in here, below these lows. I used this low right here, Paul. It's actually a really good example. Where is it? Where's the first time we came into it? Yeah, NASDAQ came into that low here. Yep. Okay, so we formed the SMT right there with this candle. There we go. Okay, so that was the SMT I took. I'm actually a losing trade. It formed another high resistance liquidity run. It formed that SMT, that chain to stay delivery. I went long at this candle closure through it, put my stop loss below. I think I put it like here, and then I got stopped out, right? I think I did it on the ES as well. Then we had NASDAQ come in and make another high resistance liquidity run where we made a lower SMT and the model printed again, and this would have been the winner. So you can see sometimes there's multiple stop hunts, and especially when you go in lower time frames, it gets a little bit messy because you have multiple stop hunts. But then that's the winning trade that prints. So there you go. There's an example of a winning and a losing trade. So the SMT occurred once. I took this SSD, and then I got stopped out. And then the SMT occurred again, another SSD, and then it gave the expansion. Okay, so that's 3 different examples. Let's do one more on the hourly because that's the time frame I trade the most, and then we're done. Let's just choose a day, guys. This has been jam-packed, so go watch it again after. Okay, I'm going to choose another key level from maybe last week. Just do something that's recent enough that we remember it. Okay, cool. I have this hourly imbalance. Actually, I'll do New York session because I know we all trade New York session for the most part. We have these swing lows right here. I'm just going to label that as a stop hunt in a big bold letter so you can see the SMT that forms below that level. So now we're looking to trade this candle, right? That comes in, forms the low with SMT. And is this what kind of candle is this, guys? This candle too, right in here. Reversal or reversal expansion? Yeah, it's just a reversal. It's just a reversal. And what's the biggest indication of it just being a reversal? How far does it deviate from the open? It deviates the entire large distance away from the open, right? And then let's look when it sys. That's how we'll be able to qualify even better. Okay. So the chain of state delivery is going to be defined in here. So it sys at 10:30, which is within the first half, but it doesn't expand. So it just starts to consolidate. So the entry in candle 2 is going to be, again, what else do you not notice in this leg, guys? What's not in this leg? So we're looking for ideas to support a reversal, right? What's not in that leg? IFVG? Yeah. There's also no what. What do you not see higher? What do you not see higher? What are we not creating? Displacement. Yeah. No fair value gaps, right? So is the market in a hurry to, again, remember the string analogy? Are we rapidly like pulling that string higher? No, right? The market is not expanding. And so it might consolidate. So if you want to enter in candle 2, here's your entry, right? You can either enter on the chain of state delivery or retest, completely up to you. Let's say you use my entry, you just enter on that SysD. Again, you're going to be risking 100 points, which is a really big stop loss, which is why I wouldn't love this entry, because my 2R would be all the way up here, right? And it's about 1R to the New York high, so this is the draw on liquidity. So fine, it's a decent trade, especially if you're only targeting 1R. But what I don't like about this is what? What do I obviously dislike about this entry, guys? What do you think I just would kind of deter me from trading this entry and not the next candle? Huge stop loss. Yeah, yeah, you nailed it, right? Like I don't want to have to cover. If so, say I enter here, even then I'm risking conservatively 80 points, and I have to risk that. I want to stay on my 5-minute chart, but even if I go down, I'm going to see that realistically, even if I go to a 3-minute chart and I frame this as like a breakaway gap, I'm not comfortable framing that as a breakaway gap personally. So I would still want to risk that low, which is 70 points. So, and you can see it almost comes into that quote unquote breakaway gap area. So you would need to risk essentially all of that low. I would much rather wait for the next candle to open, right? So then let's look at the next candle's open. So this is 10. Wait for 11 to open. Now we're talking, right? Look at 11. Okay, 11 opens. We need to see what? What are the criteria for a candle 3 continuation? Put it in the chat. Not just my students. Someone who's new here, put it in the chat. Just SMT SysD. Nice. That's forming. Remember, what your job is to visualize the higher time frame candle that's forming. The higher time frame candle is forming its wick. Visualize that wick being formed on the hourly charts. Wait for the opposing run. So we open, we immediately trade lower. I'm asking myself, is there SMT when we trade lower here? Yep, I see it. Where's the SMT? Do you see how we put in equal lows? And we take this candle's low? That's good SMT for me. You can also wait for a swing point divergence, right? Like you have to see an actual swing low diverged at. For me, I know this is a lower time frame swing point. So I'm comfortable using those equal lows. However, if you want to wait for a true swing point divergence, you're probably not going to get entry in this candle, right? Because that doesn't actually ever happen. We never come back below, right, this swing point. So for me, I'm going to use this as the opposing run, and I'm going to use just that candlestick SMT as my as my entry technique, right? Once we close above it. Now, here's a question. Why am I changing my definition of SMT from the swing point to just these equal lows that we created? What about this seeing these equal lows versus this sweep gives me confidence? We're already in candle 3, right? Where is my draw? Exactly, Alpha. Yes. My draw is already higher. So here I'm just seeing that and I'm like, okay, so as long as price can really hold above this, like you can see again, we form another kind of candlestick divergence right here, right? Below this point. Once I'm seeing these things confirmed, especially because we're holding the halfway point when we come back in, look at how not random that is, right? The halfway point of this wick. I know that's an institutional level. So you can even enter when it comes back above or enter on this SysD. But for me, I'm just comfortable. I want to get involved anyway. So if I'm entering candle 3, I'm entering probably once we close here, I'm risking just that low. And now I have a way better risk to reward. Notice how I can actually get my 2R. There you go. So that's the power of a candle 3 entry, isn't it? Right? Because in candle 3, I already know the order flow is confirmed. What am I waiting for? An opposing run, an SMT, and then good to go, right? Gonna slam it. Okay, guys. So this is how I trade. This is a very comprehensive model. This is a very comprehensive lecture. For all the new people here, feel free to stick around, look at all the lectures, and for anyone who's old or anyone who's just going to stay around, this is how we trade every day, right? So this is what we're looking for every day, and now we've kind of put it all into words. Yeah, I'll post a lecture as soon as it's done. Let me know if you have any questions about anything, and enjoy your weekends, guys. Take some time to study, take some time to recharge and relax, and I'll see you guys all on Monday. Okay? Take it easy. Peace. Oh yeah, one last question. What's up, Tyler? My pleasure, guys. My pleasure. We'll answer Tyler's question and then we'll hop off. And again, if you have any questions, guys, put them in here, okay? So from the video, if you have any questions, just put them here. What time frame you trade like session from 9 a.m.? So I trade from 8 a.m. onwards. So I'm looking to either frame the reversal at the 8 a.m., 9 a.m., or 10 a.m. hourly candles. Yep. I trade the hourly M5 alignment, but I use all the time frames to build my bias, right? So I'm going to build my bias like I do from the weekly, monthly, and daily charts. Yeah, so 8 a.m. to around 11. I probably won't trade PM session. No, this model applies to absolutely everything. Futures, Forex, crypto, commodities. Yep. Yeah, I'll upload this. I'll upload this as soon as it's done. So one of the individuals in my Discord named Baymax, she uploads everything for us. So I'll upload it into the recordings. Awesome. Okay, guys. See you guys on Monday. Take it easy. Peace.